So I'm looking for patterns that look like a bull flag and a bear flag. Um, okay, this is a good chart of the bull and bear flags. So we've got this uptrending channel, and we have, this is the lower channel line, the upper channel line. Normally how you would look for a bull flag is you have a spike up like this, and then the stock either in an orderly, you draw parallel lines above and below, and it can be a downtrending flag. It can be straight across. It can also be slightly up trending. On this case here, you can see this is a bullish falling wedge. And so the reason that it's bullish is because the market is going up and then pulling back. This is bullish. This is up, pulls back. Now, if you take this chart and on your laptop and put it in front of the mirror and then stand on top and then stand on your head and look in the mirror, you'll see what a bear flag looks like. I'm just kidding, of course. Let's see if I can find if I have bear flags on here. I'm going to, let me just see. I'll look for it on a. I've got lots of on the short side. Bear flags, what they look like. So the difference between a bull flag and a bear flag is that a bull flag is in a rising market and a bear flag is in a falling market. So here we go. This MED, which we shorted, it tops out at 257, pulls back, and then makes this flag pattern like this. Now, technically, yeah, you get it. Normally on a bull flag, you would get here, you see this big spike up, and then you get this trend line like this, There's a bull flag. I didn't draw it very well, but that's a bull flag. It pops out above, and away it goes. These are all bull flags in here. Pops up, flags. Pops up, flags, pops up. Now, having said that, here you get this huge retracement. And this, in actual fact, then, you would think would be a bear flag. Because, of course, we can't see any of this. And the stock has come down and now flagging. That's a bear flag. But in this case, it resolved itself to the upside. You could even look at it this way. This is a bear flag because it's come down very sharply. But it resolves it to the upside. So there's not 100% science. I mean, this is only 70% of the time are these chart patterns of accuracy. There's only one that we've got that seems to be 99%, but in general, you're looking at patterns that are 70-80% successful. So then you get this, then we get this bear flag, or you get this sell-off, and then this flag. Now this is a bear flag, and sure enough, it resolves to the downside, and then it spikes down and forms this wedge. This is a bear wedge, and then it hits that and comes down. Now we've got it forming another bear wedge in here like this. This is bear flag, bear wedge, bear wedge. So those are all examples of bearish patterns. And the reason is because it's in a downtrending channel, and because it's downtrending, that makes it bearish. When it's an uptrending channel, then they're bullish. And so at the turning point, we would here, I mean, when this comes off sell so hard, you would think that this next move is going to be bearish and it rolls over. But in this case, it continued on. In this case, it sold off, became bearish. Then for sure it's bearish. Now these are all bear flags, bear wedges as it heads down.